Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. This video is the weekly review of the performance for Forex Triple B. We are in the week of 13 to 17 of January 2020. So, let's go over the trades that my team decided to trade on this week, and I would like to explain the logic behind them and the steps we do and we take. As always, we work on this structure. We are pre-analyzing the market. We choose the instruments we want to work with. We do that on a multi-time frame analysis and scan. When we find pairs that are synchronized in the same directions without signs against, that's the ones that we choose to trade. And now I would like to explain the logic behind the trades, and that's all. The purpose of this video is educational. So I want you to see what do we do in order to choose the trades that we trade, the good ones and the bad ones, of course, and also when it's best chances to enter a trade and the odds to be on your side to end up with a profit. So the first one this week was New Zealand versus the franc. It was a sell position. And let's see, what did we have in the analysis on this pair? So New Zealand franc. So generally speaking, the way I see this pair, I also included this pair previous week as a sell opportunity on my YouTube channel. You can find the video there, of course, as a day trading opportunity. So I was expecting a two waves correction here. After a triple wave to the upside, so we got triple wave upside, bearish divergence. I was expecting a corrective cycle. Watching and observing the 4-hour chart, we got the pattern for the sell. It was pretty classical and easy decision here. So sell the rallies was the plan for this pair. Let's go back here. Then with the opening of the week, we got a two waves retrace, and as you can see, a massive resistance that was holding here. Pretty small risk on this one, and classical opportunity. So it was easy decision to go for a sell with the higher time frame analysis in our direction. A sell and got paid. Next one was a gold, and also I was looking for the sell trade here. What we got here was the 3 lower highs, 3 lower lows, 2 waves correction, sort of a double top. Classical dropping down slope on the 4-hour chart. I was expecting here a continuation downside. Let's check the analysis so to understand the logic behind it. The way I see that is that this special cycle we got should be coming with 2 waves, and basically that's what I was looking at. Now at that moment we already got 2 waves and bullish divergence, but I was under the impression the pair will try to reach it a bit deeper. Simply because the whole movement was developing so long, so it's hard to believe the correction would be so short. That's pretty much it, and go back to the trades here. So the direction was looking for the sells. In that case, was wrong, and the gold hit the the image here. We don't have the image, some problem, but as you can see here, the numbers. This trade finished as a loss. Next one on the list, also a loss, was the pound CAD for sale. Also classical bearish conditions, 3 lower highs, 3 lower lows, 2 waves correction. Simply fabulous, nothing else to say. But despite starting to move down and paying well, the next correction went deeper. And hit the stop loss. Here is the explanation for this trade. What did we have here? So first of all, the daily time frame, what and why. triple cycle to the upside, bearish divergence. I expect a corrective cycle and to reach that lower. 4-hour chart gave us 3 lower highs, 3 lower lows, 2 waves correction, trend and breakout. So my understanding was that this is what we are going to develop, and sell the rallies is the plan. I still expect sell the rallies, by the way, of course, according to the daily cycle. However, in that timing, it started to move down. As you can see here, it moved pretty well, but we didn't cash out. We wanted to go with the whole daily cycle. In that case, it was a bad decision, but as you know, we cannot ever predict it, right? So we finish with what we choose. If we go for the long-term target based on the daily Bollingers, sometimes the patience pays, and sometimes not. In that case, it was not, and this trade ended with a loss. And this is a very important thing here, because even that the technical analysis could be perfect in times, sometimes the market does not agree with the direction or with the timing, and it can cost. So what can we do in that case? Just continue to work based on the rules and respect the statistics. Sometimes it will be great and the market would agree with us, sometimes not, and the only thing here is to remember it's part of trading. The market doesn't have to agree with us every single time, but we earn our odds and our chances when we work in synchronized conditions on the multi-time frames, when all the time frames show, well, all the time frames we involved with in the directions we choose to trade and the time frames we choose to trade, when they are synchronized and fit and to the same direction, that's where our chances come. As simple as that. Next one, well, that's where the positive run started. That was the Aussie New Zealand to the buy. And here we are. 3 higher highs, 3 higher lows, bullish trend, 2 waves correction, right to the clearance zone here, as I love to see, and false breakout and retrace. So what was the analysis for this pair and why I was expecting here a rally? Just remove the line. According to the daily time frame, we got a bullish divergence, so I was expecting here a retrace to the upside, and basically that was the expectations. Corrective cycle in 2 waves or a range. So the way I saw that this is a developing run, which should been basically creating here some daily, so 1 hour chart bullish structure. That was my plan, and that's why, without having signs against, we got a 4 hour chart, 1 hour chart, synchronized in the direction with the daily pressure bullish divergence, and the 15 minutes provided us a bullish trend pattern, 3 higher highs, 3 higher lows by itself with 2 waves correction. Was easy decision, and we got paid here on a very, very beautiful ride. Next one on the list was pound dollar sell. We got a bearish trending structure here, 3 lower highs, 3 lower lows, 2 waves correction, sort of a resistance that was holding here. Even though the risk reward is not the best in such case, the full picture here is stronger than anything else. We got a triple cycle on the daily time frame with the bearish divergence, and I was expecting a 2 waves correction. That's why looking for sell here was the easiest decision, considering the daily and the 4 hour chart, which creates the trending structure. The decision to go for sell was super easy, and the intraday agreed there. It was an easy sell with target being reached. Euro versus the yen is the next one, and what do we have here is 3 higher highs, 3 higher lows with 2 wave retrace. Why the direction is bullish on this one? According to the daily time frame, we are developing here a triple cycle, and basically this is the place where now I would expect a possible retraces, but until then it was still developing. Why? Because after this place we got a two waves correction and a bullish hidden divergence. So cycle lost the synchronization to the divergences. The 4-hour chart here provided us the bullish pattern by itself, trending pattern, right? 3 higher highs, 3 higher lows with 2 waves retrace. So the idea here is, and here we are, 4-hour chart bullish hidden divergence with a daily bullish hidden divergence. The bounce from here with a bullish divergence by itself, then higher highs, very trending structure, very easy decision, and then we got the intraday opportunity, tiny risk, beautiful potential reward, and this was an easy decision. All the time frames got synchronized and we got paid. EURJPY, also a short-term opportunity. We got our higher highs, higher low structure here with 2 waves correction, right on a clearance zone. What was the analysis for this pair and why the chosen direction was back then to the upside? Daily time frame, we got this cycle with the bullish divergence, false breakout on the bottom, false breakout on the top, turns that as a corrective cycle, and we saw the bounce from the bottom here. This bounce would take place if the lower time frame would be a legal cycle in play there. So we got this one with, as you can see, a bullish divergence at the end. From this moment, basically what happens is we start to gain the bullish patterns by making the higher highs, higher lows. All the divergences come in play and become bullish, and the intraday provides us the 3 higher highs, 3 higher lows with 2 waves retrace. Again, easy decision to join all the bullish divergences from the higher time frames, and this pair also finished as a profit. And the last one was again Aussie versus the Kiwi, another opportunity after the one that we already got were involved with before. And again, same story. New bullish trend pattern by making 3 higher highs, 3 higher lows, 2 deeper waves to the downside. The trend is still bullish, as I explained before. Again, easy decision, and again, a beautiful rally. So what can we learn from that, guys? As you can see, sometimes we do a perfect analysis. Well, at least it's perfect before the trade, the market moves. But remember, we cannot ever predict how the market will move. So why is that important? Because by understanding we cannot predict how the market will move, all we can do is increase our chances. And we increase our chances to be in the right direction if the multi-time frame analysis match, right? If it matched and basically pointing to the same direction, that's where our chances are. Will the market agree with us or not? We do not know. We cannot know. But what we can know is if we keep working clean with increased chances in our favor, that's where we get our chances to be paid. Remember, statistics is trading is the business of statistics. That's what it is about, okay? And by saying that, it's important to understand there will be losses, there will be profits, and we don't need to predict, we do not need to forecast. All we need to do is to stick to facts, trade the facts that the market give us, where the odds are in our favor, and keep working. That's all, and the market will do the rest. Okay? That's pretty much all for today. I hope you find this video helpful and educational, explaining you the steps and the logic behind the position we do in the Triple B, the good one and the bad ones, of course. For all those of you who have and own the Triple B copy, below, not below, sorry, inside the members area of the Triple B, you have a direct link to join our Telegram. I hope to see you there with us if you are not in yet. And if you don't have your Triple B, but you do want to join our Triple B community, then below this video in the description, or in the pinned comments you will find a direct link, including the option to get it for free completely with the broker's program. So that's all for today. Thank you very much for your time. I wish you a wonderful weekend, and I'll see you other week with more videos. Bye for now. Yours, Vladimir Ribakov, Traders Academy Club.